I
I'm
know.
like,
So
is there
then
some Zoom
do me a
update I'm not
favor,
aware of?
Vince, and go ahead and mute your mic while I'm chatting. And then when it's time for you to come back on, we'll unmute you. But you don't have to be a tech savvy person to figure this thing out. But guys, I have been semi MIA for gosh, and I was doing the calculations. It's like been a year and a half and change, probably then some. And I've been dibbling dabbling, trying to figure out and along this journey learning. Because for many of you that are on here, actually almost all of you that are on here, we are connected somehow, some way within this crypto space, from either one or multiple platforms that unfortunately, for various reasons, rather it was to the lack of regulations and acceptance of crypto and what was happening inside of this space with the with all of the things going on in behind the scenes in our government that wasn't allowing us to be able to win in this Web3 finances crypto space, or maybe you got involved in a rug pull, or maybe we were in one of the companies that just was a scam. Let's call it what it is. But along that journey, we were all learning together. And I am a person that shares the things that I love. So when I come into contact with something and I feel that it's working, then I'm open to sharing it with other people. But what I've learned from being stung a couple of times, one too many times along this journey, within the crypto DeFi space was that I wasn't willing to once again open up sharing anything until I spent adequate time, not just researching and learning, but actually working it and doing it myself. So I knew that I had a path that I believed that would more safely get us to where we wanted to go. And then also put us in a position to be more educated along the way, not allowing us to get into this space because you're going to meet my friend, my business partner that I've learned along this journey. And one thing I shared with him is I thought I knew crypto. I thought when I was leading all of you in this crypto space that I knew exactly what I was talking about. But the more that I have learned along the journey, I realized that I knew about this much and there was so much more that I had to continue to learn. I knew very little. And that's what many of us knew. So we were walking into these opportunities with the lack of information, with the lack of knowledge that unfortunately allowed many of us to get burned along the journey. And I'm not willing to get burned anymore. And for the past year, I have plugged in and have been on a road that's been allowing me to win. Most importantly, allowing me to win while I kept custody of my assets. I no longer give anyone else the control. And this is what I'm learning along the journey, and this is what we're going to learn today. Keeping control of our assets and understanding the smart contracts, learning how to read the smart contracts. There's very little things in here that we got to learn along the way to empower ourselves. So today I'm going to welcome all of you to Unlocking Wealth Secrets with DeFi. And DeFi, that is in this new deregulated space. And guys, it is not going anywhere. Our president has made it very clear that they are making the initiatives, and you're seeing new laws come out consistently. And Vince will be going over these things as I begin to introduce him, that are putting us in a place that if we all get plugged in correctly and we learn how to do this, we can literally walk out of here um, in a very different space that we're all in now, but not walking out of here just empowering ourselves, but this can actually change the trajectory of many generations to come for each and every one of your families along the journey. And this is not relying on third-party platforms to be doing the work for you along the journey. This is for those that are going to want to step into this space and learn, because I can tell you when before I got tuned in, tapped in, and turned on, I was scared and I felt it was overwhelming. But once I got into the space and I learned it, I'm now sharing it with the next person because I like to turn everything into like the For Dummies version so I can literally teach it so it's much easier for the next person. So that's what I've been doing along this journey. And so let me figure out how to do this. again, I'm gonna do a reintroduction because my name is Charisma Shackelford, and we go way back a couple of years. Some of you on this call, we go back over decades. Some of you, I call my mama, Mama Corey, sitting on the call, um, and many more people that are along the journey. My good friend Andre's on this call. My sister from another Mr. Corliss is on this call. My brother from another mother, I think I saw him hopping on this call as well. Um, Along this journey, I've met some amazing friends, and you guys are all just here, just plugging in to learn. And I will tell you this, I'm not asking you to buy anything today. I'm asking you to get plugged in and to get educated along this journey. There are other ways that you can get tuned in just a little bit deeper, but at the very core, if you do nothing, there is a QR code on the bottom of the screen, and you're going to see it on every screen because we want you to join our free community. Every week, there are market updates that come out in regards to crypto and the web DeFi space. I want you to get educated along the journey, and it comes along with getting tuned in and tapped in along that way. So without further ado, I'm going to introduce you to, I now call him my brother from another mother. Actually, it's a really fun story. Is my good friend Adam, who actually helped me build my brand many years ago. His brother did the photography for my brand and created this amazing persona of who I was and literally brought it to life. Along that journey, he was working with other individuals, and he met Vincent and realized that when we were still keeping in contact quite some time, because I watched them on their journey and they watched me on my journey of growing, he found two individuals and he said, I got to introduce the two of you together. Vince and I got on a call. I realized that he was plugged in. And when I said that I didn't know crypto, my lights went on immediately because I started researching this guy, and he's better known as Crypto Noah inside of the crypto space. He is not only an influencer in the crypto space, but he's one of the early adapters. So he bought his first crypto in 2017. And prior to being in crypto, he had a background in Forex. So he was back there trading and doing some of the fundamentals when it comes to learning what we're doing, and involved in credit card processing. So he understands evaluating and doing all those things. But he is, along that journey, is the founder of Halliburton Capital Group. And this is a successful crypto investment firm located here in the United States. And he works with individuals that are dropping capital of about 50K minimum. And he's multiplying their assets. And I believe this year that they have well over 100K return. And he can share those details with you. But these individuals are growing their capital, and he's able to do this for them. And he's been doing it for quite some time. He is considered in the top 3 of DeFi research analysis in the entire industry. And I'm talking about worldwide. Companies come from all over the world in this space, coming to Crypto Noah, aka Vincent Halliburton, to do a fundamental analysis live on their companies and do a deep dive so that other people that are in the crypto space, the investors, can actually get a deep dive into these companies before they're doing their investments, before they're doing an IPO, an initial initial coin offering. They're coming to him to have these things done. He's also considered a top KOL. That's a key opinion leader. A lot of people confuse this with being an influencer. They are got some similarities, but but it's very different when he's providing his opinions on what's going to actually pop, and the fact that he can find crypto opportunities when they're very small before they actually reach the masses, so the individuals are able to, on a very lower level area of multiplying their assets in this space, they're able to multiply those cryptocurrencies before they actually make it to the mainstream. He's also created the world's first crypto-inspired hip-hop album, and that's what we were trying to play on before here. It's been played all around the world. at different crypto conventions. So it's kind of fun because he's not just a technical guy, a techie guy in the background, but he's also very creative. But most importantly, what I loved when I met him was his heart to go and serve, his heart to want to share what it cost him well over $100,000 trying to learn and put himself into the space to be able to help others, but wanting to lock arms with me to be able to create something that all of us could afford to be able to dip our toes into. So I know that was a long introduction. On the bottom of the screen, you can see his YouTube. I encourage you to screenshot this, go and follow this guy because what he's doing is really changing the lives of many people along his journey, and I'm happy and excited to have been recently announced, not just his co-founder, but running alongside him with his co-CEO as we bring wealth in the DeFi space to the world. So without further ado, Mr. Halliburton, if you want to come on, and I'm gonna highlight your.
What an intro. We got to get you co-hosting the BET Awards. I appreciate that. So first, I just want to thank you, Charisma, for the intro again. Very lucky to have you on the team as well. Charisma is amazing. All of you on this call who have known her for 10 years are very fortunate to know her for that long. I've known her since last March, and it feels like it's been years. Learned a lot together, accomplished a lot together, and I think we have more accomplishments ahead of us than we have behind us. So next, I want to thank everyone here for coming on, spending your time on this Sunday. Hopefully everyone had a good weekend. And just my goal for this call is for everyone to be able to go to sleep a little bit smarter than when they woke up. The information I'm going to share with you guys, you will be in the top like 2-3% of the world of people who know how to make money in this way, specifically passively. I'm literally going to show you guys the best way to make passive income in the history of the world for the common person. What I'm going to show you is something that has been going on for centuries. It's called market making. We'll get into that. But this is something that financial institutions have been doing since the dawn of markets. And now, for the first time in history, everyday people like us get to have this opportunity. And it's only going to exist probably for about 2, 3, 4 years in this capacity until the institutions start to flood in. So we get to be new into a brand new space. Charisma, do you want me to share my screen, or are you going to click next on the slides?
You could just go ahead and tell me hit next, and I'm gonna. Here you go.
Okay, you can hit next. Okay, so to understand DeFi, which is short for decentralized finance, I'm just going to give you guys a super brief history on traditional finance as it relates to what I'm showing you guys here. So it says here, and I'm not going to read all this stuff word for word, but just this one and another one. So historically, we have these centralized entities that has issued our currencies, and it's the foundation of our economies. And the issue is, whenever they're issuing our currencies to us, they bribe us to give them our gold, and what ends up happening is they always print more money than we have in gold, and that's how the value of our dollar has been dropping since the creation of the dollar in 1913 in the Federal Reserve. So it's like any recession, depression, any economic downturn that we've ever seen in the world, it's always traced back to the Federal Reserve making it easy to borrow money in some aspect of the economy. Like, we all were around for the 2008 financial crisis. And that was because the Federal Reserve made it very, very easy to borrow money to get a house. It's a famous movie called The Big Short, where these people were trying to figure out what was going on, and they're knocking on doors and they're asking for a person's name. And they're like, "That's my dog." It was so easy to borrow money to get a mortgage. You could have filled out an application and got a mortgage in your dog's name. The same thing happened during the Great Depression. They made it really easy to borrow money to get appliances and cars. And once interest rates are really, really low and they raise, people can't afford these things, and it causes a boom. So the issue is we have little control over what these corporations do with our investments, with our money, because these corporations invest into these things that I was just telling you about. And when it all goes kapooey, no one's held accountable, and we always get the short end of the stick. Chris, we can go to the next slide. So, cryptocurrency. Crypto is short for cryptography, and cryptography dates back to the BC days, right? The Romans would send messengers to people, and they would like write cryptic messages on people's heads, and the king would see them, have them take their hat off, and they would read something. So cryptography is basically just a way to encrypt a message to where only these two sides can get it. So Bitcoin is not Like Bitcoin has a lot of ancestors behind it that made it possible. So you had things in the 80s happen like DigiCash, which were people have been trying to create Bitcoin forever, essentially. You had the cypherpunk movement in the 80s or in the 90s. And then you had BitGold, all these different things, super technical things, just different forms of money that people were experimenting with. But Bitcoin was the first one to actually take off. The white paper was released in 2008, and Bitcoin was created to be a hedge against inflation and government manipulation, such as I was sharing with you guys in the beginning. So the first block was mined in 2009. Charisma, you can go to the next slide. And I have a video on my YouTube that talks about exactly how Bitcoin has value compared to gold and fiat currencies. That's a story for another video. I'm here to teach you guys how to make money passively, but if anyone wants that video, feel free to ask me. So right now, investing into crypto, it's a brand new asset class. And on this chart, I have all the asset classes named here, or the main ones at least, right? We have real estate, stocks, bonds, gold, commodity, Forex, all these different currencies. But most of the institutional money is already there. It's not in crypto yet. And you want to be investing into an asset class that institutional capital is coming into if you can, right? That's the best investment opportunities because institutions and companies, they say 3% of money own 97% of wealth. The 3% are these institutions, right? So investing into crypto right now is literally like investing into the S&P 500 before the Roaring 20s, before they made it easy to borrow money to get cars. Like imagine if you can invest into Henry Ford and the Federal Reserve just print money and made it super easy for people to get cars. It'll be super easy to make money. The same kind of thing is happening with crypto. And if you don't remember anything from this call, the most important thing to remember is that institutional capital can only flow into a brand new asset class for the first time once. And that's what's happening right now. And like Charisma was saying at the beginning of the video, a huge reason why we have so much institutional capital on the sidelines is because they don't want to break the law and get sued by the SEC, because the SEC has made it so that no one knows what's going on. But if you play and you break a rule, you get sued. So these institutions, once you get so large, you're worried about maintaining the money you already have versus a bigger gain, right? It's harder to maintain than it is to get. So they worry about what they can lose, not what they have. Warren Buffett has 2 rules. First rule is don't lose money. Second rule is remember rule number 1. That's what institutions live by. So they haven't been investing because there hasn't been clear guidelines. Literally 3 days ago, we had 2 big bills pass: the Genius Act and the Clarity Act. The Genius Act makes it so that regulated financial institutions and banks can legally issue stablecoins. Stablecoins is like US dollars on the blockchain. And that's huge because now banks are going to be playing with blockchains more. More importantly, we had the Clarity Act come out, which draws the line between what cryptocurrency is a security and what cryptocurrency is a commodity, so that they can each be regulated. Securities will be regulated by the SEC, which is the Securities and Exchange Commission, and commodities will be regulated by the CFTC. So now we have clear guidelines, and institutions can play because they know the rules, and it's not a risk that they will get sued. So this next year and a half, 2 years we will look back on this year and be like, that's when crypto really got started. Like this is when it's really getting started. This is literally what we've been waiting for. Okay, Charisma, you can go to the next slide. So institutional adoption, we literally just talked about that. You have some of the largest institutions in the world, not just buying crypto, but creating crypto products, right? Goldman Sachs, Morgan Stanley, Tesla, Amazon, Walmart has been using blockchains for years. Like they use blockchains to track all their products, all the places where they're getting food. So if there's a recall on papayas, or there's something that's giving people salmonella, they know exactly what farm that came from in Mexico or wherever, whatever. So we're having all these institutions starting to use crypto and blockchain technology. And I've studied the internet and its parallels and how it became mainstream. And how internet became mainstream was through institutions, large companies providing it as a service. Apple, Microsoft, what's the other one? Larry Ellison's company. I'm drawing a blank right now. you had these companies hosting servers providing service so that people can come and use the internet in an easy way. Now we're seeing that same thing happen with blockchain. Chris, you can go to the next slide. So um, now that we kind of have that backstory, what is DeFi? Censorship resistant financial system open to anyone while minimizing one's needs to trust/rely on central authorities. So when you look at traditional finance, in order to have a financial system, just like you need certain things to have a city. You need a city hall. You need, neighborhoods. You need police officers. All these things to be considered a city. There are certain products that you need in place to have a fully functioning financial system. You need exchanges for people to buy and sell assets. You need payment rails. You need insurance in case things go bad. You want derivatives so that institutions can come on and take leverage. You need exchanges. Like you need all these different things to have a fully functioning financial system. And when you look at third world, you need a property system. That's the most important thing, right? If you can't prove that you own something, you can't borrow against it. And that's why you have all these third world countries that, have issues, right? If it's a third world country, it's because they're lacking a financial system. When you boil it down to its essence. So DeFi is a financial system with these same products, but it's on blockchains. And instead of having these middlemen who work at the exchanges, middlemen who work at the insurance companies, middlemen who work at, you need borrowing and lending to have a fully functioning financial system. You have what's called smart contracts facilitating all the transactions that normal people would. You still gonna need people to run the smart contracts, but instead of needing to hire 10 people to do all these things, you need 1, 2, maybe 3 people to manage a smart contract. So it's reducing the amount of people by 70%, 80%, not eliminating them. So just to explain what a smart contract is, it's a piece of software that you can program to do things. I always like to compare it to a vending machine. So a smart contract does 3 things when you boil it down, to keep it simple. They store rules, they verify rules, and they execute rules based on functions. So if you look at a vending machine, it's kind of like a smart contract. The storing of the rules is knowing that a bag of Doritos is D1. The verifying of the rules is knowing that when you put $1 into this vending machine, it's able to recognize that it's a real dollar, so it's not giving away all of this merchandise for free. And then the storing, the executing the function is once you hit D1, it knows to have the ring spin so the bag of Doritos can fall for your enjoyment. So that's what smart contracts do for, let's say you're late for a plane and you have plane insurance. Instead of having to call someone and be like, hey, I missed my flight, and you're doing all this stuff and you're wasting a bunch of time, a smart contract would be like, boom, they weren't checked in, missed their flight, issue them their money back. And you can just extrapolate that across all these different inner workings and things that have to happen inside of an economy with all the industries that I just named. Chris, you can go to the next slide. So now, birth of DeFi. So you have like Bitcoin was the first cryptocurrency, and then you hear about altcoins. Altcoins just means alternative coins, and it's literally every other cryptocurrency except for Bitcoin, because the reality is that people built all these other cryptos to do what Bitcoin can't do. But Bitcoin was just a Trojan horse. Bitcoin is supposed to be a store of value, store your wealth long term, but DeFi doesn't necessarily happen on Bitcoin because Bitcoin wasn't built for that. You have what's called layer 1 blockchains, and you can look at a layer 1 like an internet stack. Like you have the internet, the protocol that's underlying the internet is something called TCP/IP that I won't get into, but TCP/IP allows you to build different applications on top of it. So without TCP/IP, we wouldn't have Facebook, we wouldn't have Instagram, we wouldn't have Google Maps. All these applications that we have on our phone are all built on top of the internet. And now we're moving on to decentralized finance, and it's even Ethereum is built on top of the internet as well. So the internet's like the foundation, but these layer 1 blockchains are the foundation of the new internet. And instead of people writing code to be built on TCP/IP, more people are going to be writing code on layer 1 blockchains such as Ethereum so that it can get the blockchain benefits such as smart contracts, because you can't just use smart contracts on the internet, right? And everyone's goal is all these companies, they want to be laying off more employees so they can make more money, and smart contracts is going to help them do that. So Ethereum was the first project that allowed DeFi because it was what was called Turing complete. And the word Turing comes from Alan Turing. If you guys are interested, it's a good movie called The Imitation Game that basically shares the history of the computer. Fun fact, the computer was created to win a war. so that we can crack the enigma and win World War II. And after we cracked it, we have to keep the secret so that they didn't know. So that's why the computer was originally invented. And before the computer, you have the calculator, and the computer and the calculator, the difference is the computer is able to handle complex computations, which is what Ethereum can do. And DeFi, this whole thing that I'm telling you about, it started back in 2020. And most of these applications are built on Ethereum or layer twos that I'll get into later. Charisma, you can go to the next slide. All right, so now nothing's all good, nothing's all bad. Everything has risk. And how you win is to mitigate those risks through risk management. So I'm going to tell you guys the pluses and minuses and the key differences between DeFi and CeFi, which is centralized finance, aka the traditional financial system. So in DeFi, you have custody over your funds, like Charisma was saying, but with great power comes great responsibility. So you have to protect your funds still. If you have your funds at a bank, yeah, they can take some financial risk, they can lose it, but they're also, kind of protected for you as well, right? So you have custody, but you have to protect it. CeFi is outside of your custody. KYC. DeFi, all you need is a wallet, right? MetaMask wallet, Coinbase wallet. It doesn't matter if you're a criminal, a minor, living in some third world country. If you can connect to the internet, you can participate in DeFi. And CeFi, you need to tell who you are. There are things you can do that can have you on the sidelines forever, right? DeFi, that's not a thing. Security risk, super important. So in DeFi, there are rug pulls and hacks. You can lose your private keys, like I just talked about, which is a way to lose access to your money. So these rug pulls, and that's why it's important inside of our community. Any project that we're using, we're making sure they have a smart contract audit. And there are also ways to get insurance in DeFi so that you can protect if something goes awry. But you always want to make sure the protocols are safe, and we teach you how to do that. In CeFi, funny thing is, well, it's not funny. The reality is that there are robberies happening every single day at all of the companies we know and love. Banks, Target, Walmart. These companies are getting robbed every single day. Sometimes stealing money that you might have just went in that store and gave them that cash, but they're able to replace that, right? So that's another security risk. If they get robbed, they don't call us and be like, hey, I know you bought that TV, but someone just broke in and stole $200, so we're gonna need that back. That just doesn't happen. That's a plus. Customer service in DeFi, you have to go on these chats and hope you can talk to someone. It's a lot of anonymous people. It's not like you can just call and be like, hey, I got my money stuck on this bridge or whatever. Like, you have to be in these Discord chats. But in CeFi, a lot of times they have customer service numbers you can call. Fiat to crypto. So you have these, think of a financial system as a city. You have to go through, or an island. In order to enter that island, you have to enter it on a bridge if you're driving over there with a car. So these are on and off ramps. So in DeFi, there is no fiat to crypto on ramps, except for you have to go through a centralized exchange like a Coinbase or a Gemini or a Robinhood or somewhere where you can convert your cash to crypto and send the crypto off of that platform. CeFi, everything's integrated, right? Crypto's going to get there, but we're still in the dial-up phase of the blockchain. But hey, we're going west. And the people who knew where they were going, those are the people who found gold when they went west. And I think we know where the gold's at. Last thing, transparent transactions. The cool thing about DeFi is that you can see, like if you go on the Bitcoin blockchain or the Ethereum blockchain, you can see every single transaction that happened in the history of that blockchain, all the way back to the first block. Like, it's literally a blockchain. You have a block with data in it, you have a chain that connects it, and you have another block, and they just go on infinitely. With CeFi, like I said, they take your money and they do things and they make their fees regardless of what happens. And if something bad happens, no one's held accountable. They make their money. So what incentive do they have to, really do a good job at managing your money? And that's why I'm not a big fan of mutual funds. Charisma, you can go to the next slide. Okay, why is DeFi important? So inflation has cooled down. The Federal Reserve has been lowering the interest rates. So, you're starting to see the economy picked back up because of that. If the Federal Reserve is raising the interest rates, is sucking money out of the system. But DeFi is important because inflation is eventually going to come back. They're still printing money and doing things with it. We still have like a huge deficit still. So DeFi is important because you can get yields that outpace your inflation. And the issue is that the dollar's purchasing power has been going down. But if you're not in a job where your paycheck is adjusted for inflation, then you're still just losing money, right? Inflation is a hidden tax. So DeFi is important because you can get yields that can not just outpace inflation, but actually life-changing yields, as you guys will see here. The average yield for the savings account is like less than 3%. You have to try hard to get less than 5% of DeFi. Like, you really have to look hard. We're getting triple-digit yields, sometimes even more, as you'll see. That's why it's important. Charisma, you can go to the next slide. So now I'm gonna tell you guys what yield farming is, right? This is one of the most important parts of the presentation. This is how the money is made. So if you look at traditional finance, when it comes to passive income, not including financial products like bonds that pay a yield, there's three main ways to make money. And it's the same thing in crypto with one extra caveat. Borrowing and lending fees. So banks, they lend you money, they charge you interest. That's how they make money. Insurance premiums. So you pay an insurance company an amount of money every month, and everyone's doing this, right? And there's such a small ratio of accidents that happen where they have to pay out. So they're getting paid in case something happens, but usually things don't happen. And the third way is you're getting paid fees to provide liquidity on exchanges. It's trading fees. Like, I'm sure everyone here has bought, stocks or any kind of financial product. You get charged a fee. So it's the same thing in crypto. You can use your liquidity to loan out on platforms, and the smart contracts will find borrowers, charge them a higher yield, and then you get the difference. You can also use your money to stake on insurance platforms where they, pay out insurance premiums. But I just told you guys how the business model works, so you make money. But the most profitable way, and the way we're going to be showing in this presentation, is the third way, and that's providing your liquidity on these decentralized exchanges. So I'll explain this really simple, because really pay attention to this part, everyone. A lot of people think that when you go and buy your stocks and your bonds and your gold, it's the exchange that holds the inventory of stocks, bonds, and gold, but it's actually not. The exchange is the intermediary, the middleman, right? And I already told you smart contracts is going to replace that. That's how we're able to make so much money. The exchanges are the intermediary between the investor and what's called a market maker, right? So every single asset class has market makers: stock markets, bond markets, commodities, gold, Forex. It's companies like Credit Suisse, Deutsche Bank, Citadel, Goldman Sachs, Morgan Stanley. When you go online, when you go on Robinhood to buy your Tesla stock, it's not Robinhood that is supplying all that Tesla stock. Someone has to buy it. Tesla isn't just giving it away for free. Everything has a price. It's those companies I just listed. They'll go and buy 200 million worth of Tesla, and then they'll have 200 million worth of cash. They'll go to an exchange like Robinhood and say, hey, here's 400 million in Tesla in cash. And then they'll tell Robinhood, only use this liquidity that I'm giving you when the price of Tesla is between $100 and $500, whatever range that they choose. They get to choose which range they want their liquidity or their money active in. And anytime the price, someone want to mute. Anytime the price. Anytime the price is in between that range and people are buying and selling, which they are every single day, even when the chart's going sideways, people still buying and selling, that fee goes to the market makers that gave the exchange that liquidity. Some of it goes to the exchange, but they're just getting paid broker fees. The market makers are making the bulk of the money, right? So market making is something that was, for the past 100 years, reserved for these large institutions. There's never been a time where humans can take their cash and their liquidity and go on an exchange and deposit it on there. It always has to be in pairs. So if anyone's ever looked on like a Forex chart, it's always two assets paired against each other. It's Euro GBP, Great British Pound, Euro USD. Even when you buy Bitcoin, you're looking at the BTC USD chart. So these institutions are always providing pairs. So now you have these decentralized exchanges being ran by smart contracts that are saying, hey, when someone goes onto the exchange to buy this, give them that, instead of a person on a computer filling those orders and getting paid a salary, or being able to put their transactions in front of yours and front run you and do all these manipulative sorts of things. Um, so you can literally take your Ethereum, take your US dollars, go on an exchange and deposit it and say, hey, only use my Ethereum when the price of ETH is between X and Y. And you get paid off of volume. And this is why market makers' portfolios perform the best, because they're making money off of buying and selling volume. When you're buying assets, there are fees. When you're selling assets, there are fees. And now, for the first time in history, we get to be market makers. And the cool thing is, institutions aren't allowed to provide liquidity in DeFi. So it's not saturated. So it's literally everyday people like you and I. And I'm about to show you guys how much money you can actually make, and how long I've been doing it, because it's actually really, really crazy. But before I do, I have to pass it back to Charisma, because she's got some really cool things to share with you guys on how you can get involved and how you can learn all this stuff in chronological order. And then I'm going to come right back and show you guys the best part of the presentation.
All right, so let me change the spotlight, move, and there we go. Hi guys, so I share with you the link, and it's also inside the chat. If you want to get into the community for free, absolutely go ahead and grab that link. But we are going to go over just really quickly 3 different levels of membership beyond the free membership, and then the courses that align with each one of those memberships. So we have our beginners, and these are for people that know absolutely nothing about crypto. And this means that they're just needing to learn the very basics and start from day one. So and to be able to participate, to be able to join that course, the very beginner's course, that is just a one-time payment of just $148. And this literally takes you through all of the information that you're going to need to understand the very beginning, because there's some people that is just, they can't wrap their head around that there's a new currency coming into play. So it goes over the history in very great detail, so that you're prepared to actually walk into the next phase. So for those of you that have already purchased cryptocurrency, you've exchanged cryptocurrency, this may not be for you. It may be too fundamental, too basic for you. So we have our fundamentals course, which is usually about roughly $250, but I believe that's it. I think these got a little bit mixed up. So those are memberships. So it's the fundamentals course is usually, and I apologize. I told you guys I was in here last minute. I was up at midnight last night and 5 o'clock this morning going back to back. But this fundamentals course is usually $500 roughly, and it's on sale for 50% off during our founders discount. So this is the fundamentals that you're going to need to learn yield farming. And this is attached to one of our courses that goes along, our memberships that goes along with it. This again is a one-time payment and you'll get lifetime access, but this is where you're going to learn all about yield farming, managing your risk, and the different ways how to deploy your capital with confidence, so that you can avoid all the beginner mistakes that Vince had to learn along the journey. And you're going to be able to set up that sustainable system and grow over time, and then plug into our challenge, which I'm going to share with you. Now, then there's the mastery course, which is also half off. So as you continue to grow, so our middle course is for the fundamentals, but when you're really wanting to get in there and learn how to run your portfolio like a business through concentrated liquidities and strategies and automations, learning how to understand the analytics, how to learn fundamental analysis, you're going to be able to get that membership, but that is along the journey. So you want to start, most people start with that fundamentals course, and especially everyone that's here. And then you attach that to one of our memberships. Now, if you're a beginner, absolutely newbie, you're young, like these owls that are sitting on the screen, then you're going to get the Alchemist. However, we have the founders membership for the Nestler that you're going to be able to get both without having to pay even less than what Alchemist is. Then there's our Parliament membership. This is where you're going to get actual more hands-on. So along the journey, you're going to be able to get more with your different memberships. So our Alchemist membership is normally $98.88 a month. You can cancel at any time. Most people just keep it or they upgrade. However, the benefit is that today and until we run out of our 100 spots that we're giving out, you're going to be able to unlock our Nestler membership. This is my favorite one right here. This is because one, you're going to get it for a quarter, less than quarter of the price, $58.88 per month, normally $248.88 per month. And as we continue to populate the community, we're going to be actually raising those prices. And I'll tell you, when I first met Vincent, the membership was just flat across the board, $5,000 a year. That was still a fraction. If you go and do your research on DeFi communities that are out here teaching this, they are asking for a minimum of $25,000 a year to be able to learn this information, because they understand how much you're able to earn once you get inside of here. But I haven't seen anyone have what we've created. So it's not just myself and Vince, but we got an entire team behind us. And these team members are all having success within this space. They're earning five-digit on up earnings every single week from their pools. And along that journey, we've created a 49 weeks to freedom challenge, and all of you are going to be able to participate. So you're not only going to be learning yield farming from taking the course, you're going to actually be able to participate in the challenge. And every single week there is a check-in call, and you're going to be sharing your results that you got from the week. But more on top of that, it's the icing on the cake. You're not going to have to do the fundamental analysis on your own. Vince provides fundamental analysis for all of the pools, so all of the tokens that are in that we are working with. The fundamental analysis is done for you. And when you learn in the course how much goes into fundamental analysis, you're going to be very thankful of this gentleman, because the amount of time that he spends on doing these deep dives is hours upon hours to get this information to everyone here. In addition to that, our coaches, actually Vince and Mr. Lovelace, they actually every single week, you're going to be able to know what pools they are in, and you're literally going to be able to see their where their ranges are, and you're going to be able to participate along the journey. And then every week when you check into your challenge, you're going to be sharing your results. And if you're not meeting, on average, we're looking for people to make 0.71% per day. We got people when they're making more than that, but the average looking no less than 0.5% per day. And if you're not making that, they're going to be sitting down with you to actually go over strategies and just go over the things that are not aligning correctly for you. But you may be in pools that aren't doing 0.5%, and your goals may be a little bit different, because then you can also cater those weekly goals to what your actual goals is. I remember when I first started participating inside of the challenge, I was literally in there working really hard to get to 0.5%. And I remember that very first day when I hit my 1%, I screamed for joy. And I had that consistently happening. And now we got some days where we're in there making way more than that. So in addition to that, you're going to have the weekly farming with you, where you're actually going to be able to watch Vince live while he's in there getting in and out of his pools, and he'll be talking through what he's doing so that you can learn as well. There's weekly onboarding office hours, which I actually those. So if you're getting into using a DEX for the very first time, getting into one of the crypto wallets that we're using for the very first time, or anything for the very first time, instead of bogging down our advanced coaches, Vince and Mr. Lovelace, you're going to come over to our onboarding call every week to get those help with those very fundamental things along your journey. We have 24/7 community support. Our members are in there helping each other, so you're never in there alone. You're going to be given, I share with you, the concentrated liquidity positions and then the rebalancing. When they're doing these things, they're sharing with you with what they're doing along the journey. You're going to get access to yield farming resources and tools and a on-demand Knowit Owlz yield farming libraries of recording. So we actually do a parliament call every week. So it's a roundtable of our coaches and some of our experts that come together. We're talking about what's happening in DeFi. They're all talking about what's happening in their pools and what types of results that they're having. And you guys get to tune into this. Now, if you want to unlock access to Parliament, we have members that have already chosen this because they understand that whatever you get in today is a founder's opportunity. It's a founder's discount. And so you're going to be able to be grandfathered into this amount forever. Just as long as you don't quit the community, you'll be able to be grandfathered in. So a lot of people are opting in for the Parliament. But you need to get in, if you are, what's ever going to align with you. Because you're going to be making, once you realize that, hey, I can make more than $500 a month in my rewards that I'm getting from my pools, you can kind of strategize where it is that you want to participate. Now, the Parliament membership, you're going to get everything that you got in the Alchemist, everything that you got in the Nestler. So each membership just grows after the other one. So this is more support. So when you get started, instead of getting started in a group session, which is happening with me, you're actually going to get one-on-one support. You're going to be meeting with one of our coaches one-on-one, and they're going to actually do a live recording that you're going to be able to keep as they're getting you into those initial pools. And on that recording, they'll show you how to get out of the pool and then actually do the rebalancing. You're going to be able to keep that recording with you forever and then just be able to watch it every time you need to get in or out without having to wait for one of the challenge Zoom calls to actually take place. Inside the Parliament, there is a monthly portfolio review session. So you actually get to go over your portfolio with the coaches in a group session and seeing the progress. So there's a little bit more that's taking place. We have some VIP mastermind sessions that go over some more higher level strategies inside of here, doing concentrated liquidities, and then maybe jumping indexes that we don't necessarily touch on in the challenge. Because in the challenge, we are keeping everything to a hand-selected amount of DEXs and wallets, and we're doing that so that we don't confuse our members that are participating in the challenge, because our goal there is to make it very simple for you, very duplicatable, so that you can actually reach those goals of getting to that minimum 0.71% per day. In addition to that, the Parliament has extra office hours. We're hoping by the end of this last quarter of this year that there will be a office hour happening every single day of the week. Right now, I believe we have like 4 days a week in there. You're able to pop in and get that advanced hands-on help whenever you need it. In addition to that, there's a mindset and spirituality hub. We believe that if you don't have your mindset right, your pocket can't be right either. And most importantly, the health and wellness guys, we are sharing some health and wellness tips that we are doing and some partnerships that we have partnered up with, because you can't enjoy wealth if your health isn't in alignment. Your health has to come first. And people don't realize this. Once you get your health right, your mindset gets right. Once your health and your mindset gets right, your money gets right. They have to happen in that order. So you got to have them all. I don't want to see any of you, unfortunately, happening to you, which has happened to a good friend of mine. He was only about 35 years old. And unfortunately, about a month or two ago, he passed away from a heart attack. Guys, too young. It's because of our health and wellness, because we're not taking care of it. So that part of there is inside of this membership, and it's a very important one. Vince is actually sharing all of his workout stuff. So we're doing a lot in there to get people in the right space to be able to enjoy this wealth, because guess what? We all got to be on the beaches of the world at some point, because we're going to be having so much of this where we want to look good along the way. Then you're going to get VIP access and perks to Knowit Owlz summits and our meetups that we do in person, either attached to some of the major crypto events that are taking place around the world. Right now, Vince is in, I forget which country because he's been all over the world for the past 6-7 months. But he's been at all these crypto events, speaking, attending, partnering up with individuals, making these connections for us. So you're going to be plugged into these VIP access perks that are going to take place all around the world. In addition to that, you'll get discounts to Knowit Owlz merch. I'm wearing, I don't know if you can see, but I got my Knowit Owlz sweatshirt on sitting right here. So we got a bunch of stuff that we have that people will have access to. And then you'll get access also to some invite-only investment opportunities. We take the collective that is in the parliament. We understand and try to figure out what it is that you guys are doing and some of the best investment opportunities that are out there within our community and some that maybe come from partnerships. Our parliament members are going to get access to these things because it's a whole entire networking community in addition to learning how to build your pools. So guys, this is the 49 weeks of challenge. I share that once again, you get that with your Nestler membership. It also comes with the Parliament membership. But most importantly, along the journey, we're going to be also everyone, no matter what membership level you are in, you are going to be able to, we got programmers where we are currently working on this ability to get you guys to earn while you learn. And this is where our community members are going to be able to earn DeFi from liquidity pools while maintaining full control of their crypto. No middleman, no giving up custody. We're going to be managing the pools, but you guys get to keep the keys. So this is smart, it's automated, and it's secure. These are the kind of things that we're bringing out to our community. But in order to even participate here, you actually have to take our beginner's course. You have to know the fundamentals of all of this because we don't want to put anyone into anything that we're doing unless they got a basic foundation of understanding. And I have witnessed firsthand thousands of people participating in programs and not understanding what was happening. I had a little bit of knowledge, but most people were just getting in on the blind faith of somebody else's word. And in this community, we're not allowing that. We want everyone to have the education so that we can all make educated decisions and not put any blame on anyone other than ourselves when things don't work out. Because we are positioning ourselves to all just elevate just a little bit more. So my favorite combo would be to get the Nestler membership if you're going to upgrade. But if you want to keep the free membership, guys, by all means, stay in the free membership. But if you do want to upgrade and participate in our 49 weeks of freedom challenge, it is $68.88 a month. Plus, you'll grab the Fundamentals Web Finance course, and that's $248.88 just one time. So in order to unlock this, you can't buy the course without being inside the community. So you would grab your Nestler membership, which once Vince gets back on, I'm going to be dropping that inside the chat. For everyone, you're also going to get a follow-up email that's going to have this information sent out to you. And then once you have the Nestler membership, once you're in the community, you're going to be able to do an upgrade. Anyone in the community that already has a membership can actually do an upgrade. And these are anyone that has one of the paid memberships. Now, if you want to go ahead and grab that Parliament membership because it is half off and you are grandfathered in forever, by all means, you're welcome to do that. But that's not going to be a requirement for you to be able to begin to learn how to multiply your assets with us. It is going to be that Nestler membership along with the basic course. This is for those individuals that want to learn along the journey because this is what our many of our current people are paying for the Nestler right now. But you guys are getting in because Vince and we went through this again. We wanted to create something that was accessible to everyone. And when I really sat down with not just Vince, but our other business partner who is not on here today, Sean, Vince, and I shared with them the story that all of us went through. I shared with them the losses that we had, and I said, I want to be able to create something that they can participate to because I've shared with some of them and just coming up with that amount of money, $500 or basically it was $5,000 was unfathomable to them. So we wanted to create something affordable. So if this is in alignment with your budget, by all means, go ahead and grab it so that you can lock in the forever discount that's applied here. But if it's not, go ahead and hop into the Nestler. I can tell you along that journey, our coach, Mr. Lovelace, we've had about a 90% success rate with everyone making at least 100K their first year during that 49 weeks. Those are people that are starting off with the bare minimum. But this doesn't include those individuals that have put in a lot more. You want to make more, you start with more. But the beautiful part of this is you're not giving anyone, you're not giving Vince, you're not giving Charisma, you're not giving Knowit Owlz, you're not giving anybody else the control of your money. You're going to be doing this on your own, and you're going to be able to cash out on a daily basis, multiple times a day, whenever you want to, or you can go compound that along your journey so it continues to grow. So guys, go ahead and take a screenshot of this. This is the QR code for each level of the membership that I just shared with you today. Again, we're not trying to sell you anything. We're just sharing with you guys here today. And if you want to grab the Clutch membership so you're getting educated and informed along the journey, you're more than welcome to. Everyone's welcome to head over and into that Clutch membership. If you want to join the challenge and you want to learn the fundamentals of yield farming so that you can begin to multiply your assets, go ahead and grab that Nestler membership. Just make sure that you're going to grab the fundamentals course once you get in there. Then if you want to grab the Parliament membership, you may not be ready to jump into those higher level strategies yet, but if you want to lock in that price, what most people are paying for the Nestler membership, by all means you can. And you can grab the mastery course, which will include the fundamentals course as well as the foundations course within that. So Vince, I'm going to hand this back to you so you can head over. And guys, if you're not paying attention, if you're doing anything else right now, this is a time for you to really pay attention to the screen, because Vince is getting ready to literally open up the curtains and show you what happens behind the scenes.
Sweet. You want to? I'm gonna have to share my screen on this one. You have
Yep,
to give
I'm going
me
to stop.
access.
Stop my video. Oop, that stopped my video. Okay, and let me go ahead, and I think I made you co-host.
It's still showing your screen, and when I hit share, it says host disabled attendee screen sharing. Oh, there we go. Let's see.
Here we go.
It still says screen sharing is disabled.
1 second, let me get over there. All right, try now.
Okay.
What country are you
All
in
right.
again? I just
I'm in Marseille, France. Sorry
gotcha.
for the boring hotel room. Okay. Can you see my screen now?
Yes, we can.
All right, guys. So that's the soup and salad. Let's get into the meat and potatoes. So I have here where to yield farm. So, you have just like you have in traditional finance, you have multiple exchanges. Like you can buy on Robinhood, you can buy on Coinbase, you can buy on all these different exchanges. As a market maker, you have to decide like what exchange do I want to provide my liquidity on? You want to go where most of the money is, right? Now, I don't know how it works with market makers, but I'm sure they have some kind of method to their madness and how they choose which exchanges they're going to provide liquidity on. So it's the same kind of thing in DeFi. So where your yield farming is, you're on these different decentralized exchanges, but you have these different exchanges built on these different blockchains, on these layer one and layer two blockchains. Layer one is like, think of the internet, TCP/IP, how I explained earlier. And the layer two is basically another piece of technology built on top of that that helps everything move faster. The layer one has like a big responsibility. It's like it's if you picture a house, the layer one is like the foundation, right? And if you have a foundation of the home, but you have these different rooms where you have your bathroom and you have to have your plumbing set up in a certain way. You have to make sure the tub don't fall through the floor. But then you have a living room where the floor don't have to be as strong. And it's the same thing when setting up a house. A layer two makes it so that it takes some of the weight off of the layer one, because the issue with the layer one is things can be slow sometimes. So you have the layer twos to where things can happen faster, but it still works with the layer one. They're still connected. So you're yield farming on different layer ones and layer twos. And now you're probably thinking, well, like, how do I know where to go? Da 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 da. Even though in the challenge we're going to be sharing everything with you, it's still good for you to know where to go. So here, let me show you guys this. So now the next thing is there's a saying called time in the market versus trying to time the market. And what we're going to teach you in our community is how to operate your portfolio just like a market maker would. Like I said, this is the first time we get to be market makers. So before 2020, it wasn't even an option, right? If you look at the portfolio of a market maker, they have a percentage of their assets sitting in cash. They have a percentage of their assets sitting in assets, whether it be stocks, bonds, gold, real estate, whatever. And then they have a percentage of their portfolio used for market making. This is the portion of their money where they take it and they go give it out to exchanges so it can always be generating cash flow to the portfolio. Um, so each three of these pillars in your portfolio have their own time when they shine. Cash shines when prices are cheap, so you can go shopping at a discount for cheap assets and sell at high prices later. Assets shine when prices are high, you can sell it for more cash to then go and deploy when prices are cheap again, right? But then the market making portion of your portfolio is always shining because you're always generating more cash and more assets, just to you make more money. You're always able to generate cash flow because you never know when things are going to go up and you never know when things are going to go down. And I remember when I was trading forex, people used to always tell me never trade consolidation. But with market making, that's the best time because you can make your range really narrow because you know it's probably not going to go outside of it. And the more narrow your range, as I'm going to show you here, you make a lot more money, but it also increase your risk. So time in the market versus trying to time the market. This this picture shows the value of $10,000 invested into the S&P 500 from January 2003 to December 2022. So if you invested all days, just held it from start to finish, your 10K would be worth almost 65K. If you miss just the 10 best days, your performance is more than cut in half. It's only worth 29.7K for just 10 days in almost 10 years. Really think about that.
I
Let that
don't
sit
think
in.
you're sharing your screen if you believe that you are.
Am I really not?
Yeah, it was sharing and now we just see you.
Oh, wow. Okay.
There we
How
go.
about now? Can you see this?
Yes, we can see that.
Okay. Okay, cool. Yeah, let me know if that happens again. Thanks. So if you miss the 10 best days, your performance is more than cut in half. Just 10 days in almost 10 years. If you miss the 20 best days, your 10K is only worth 17.8K. If you miss the 30 best days, you only made $1,007. If you miss the 40 best days in 9 years, you actually start to lose money. And that's time in the market versus trying to time the market. So just a fun fact, the best performing portfolios in history are from people who died. This explains why. The second best performances of portfolios in history is people who, and not people who died, people who inherited money from someone who died. The second one is when people invest and they forget that they had it. Right? So it's just like it shows that you want to be in the market long term if it's a good market, right? Like the American stock market, you're basically betting on America going up. Now, when you go to decentralized finance and provide liquidity, it's this there's no chart on the internet for it. We'll probably create one day, but it's the same thing. If you're not in range and you're not providing liquidity and you're doing this for, years, if you miss the best days of the market, it drastically affects your performance. So, just to explain to you what that means and how this thing works. I have these two green lines. When I say staying in range, I just mean this dotted line is the price. I just mean keeping price within my lines, right? When you're trading, you're waiting for certain price levels to be hit so you can buy or sell. When you're providing liquidity, it's a different mindset. And we have a whole mindset section in our course that teaches you how to think like a liquidity provider because it's different than the mindset of a trader, although it's related. You're just worried about staying in range, right? And if I make my range like this, like really, really tight, I'm gonna make a lot more money, but my risk is higher because it's easier for the market to go out of range, right? So now this big candle, let me turn on my drawing tool. Like I said, if you missed the 10 best days, these were some of the best days right here. Remember, I said you make money off of volume. So these big red candles, there was a lot of trading fees that was generated through these kind of events. And for these, right, this volume, the liquidity providers who are providing liquidity in the market, their portfolio is drastically different than if they were out of the market on those days, right? So now you're probably wondering, well, how do I know I have all these pairs right here. So many cryptocurrencies. How do you know which ones to provide liquidity for? Well, we have in-house tools that sifts through all of this stuff, right? Because if you go to this website called DeFi Llama, it's free. It shows all the aggregate decentralized finance data. Right now, all of the money that's locked in DeFi, it's total up to be 141 million. The peak was around 180 billion. I'm in 141 billion. The peak was around 180 billion. Guys, it's trillions of dollars that's going to flow into DeFi, right? And I just told you that the institutions, the laws are in to make it easy for everyone to know the rules. So there's going to be a lot of buying volume happening, and all the people who are providing liquidity, it's like selling shovels during the gold rush. The gold is the assets that people are coming to buy, and the shovels is the liquidity that they need to get it. We're selling shovels. People who sell shovels, they make more than the gold miners, right? Because you come in here, you don't know what what's going to be gold, right? But you know people are going to be buying. So we're not even at all-time highs from the last cycle yet. So we have our in-house tools. This tool right here is called our Yield Hunter tool, where it shows the top liquidity pools across all blockchains and all exchanges in one place. So you don't have to go to these individual websites. And you can see right now it's just filtered by yield. And you can see right now, if you have an APR that's 365%, that means it's 1% per day because it's 365 days in a year, unless it's a leap year. So you can imagine 15,000% APR. That's a lot per day. Now, this is probably some meme coin. And what you'll learn in our course is that we don't provide liquidity for two assets that we haven't thoroughly researched that we wouldn't mind holding on its own, because there is something called impermanent loss to where, like right now, if I were to get into this pool and price is right in the middle of my range, 50% above, 50% below, if price starts to go down like this and I go out of range, let's say price goes right here, this is what's called a limit order. A limit order says buy this when something happens. So if price goes all out of range to the downside, I'm going to be in 100% Ethereum. I'm buying the loser. If I go out of range to the upside, I'm also buying the loser. So if Ethereum goes up here, that means I'm in 100% USDC. So you're in range with both assets. As it's going to the top, you're buying more of the loser. As it goes to the bottom, you're also buying more of the loser. But you're providing a service. You're making fees the whole time it's going up and down. And if you're making yields that are in percentages like this, eventually you get to the point where you've accumulated what you put in and you're just playing with house money, right? Just pure profits if you're doing this long enough. And I'm going to show you a pool right now to where I got to the point where I was playing with house money in less than a month. I'm going to show you all the data. So here, if you're just like, oh, I want to start off super, and like Charisma was showing you, we're going to have our 49 weeks to freedom challenge. So we already go through all the good pools and we're going to give them to you. And we're going to show you all of these ranges right here, just so you can go and input them. And then you literally get paid while you're sleeping. Warren Buffett said, if you don't find a way to make money while you sleep, you will work until you die. So like, for example, let's say I just want to make I want to put some Ethereum and some USDC in the pool, which is Ethereum versus the dollar, not some crazy meme coin pool or something like that. Look right here, it shows all of the ETH USDC pools on all the chains, on all the protocols. And you can search by protocol and you can search by chain as well. You make the most money when you have a good, what's called volume to TVL ratio. So you can see right now with just Ethereum and USDC, you can make 212% APR. Show me a savings account that's anywhere near that, anywhere near it. And right now, Ethereum is at $3,700. All time high is 5 grand. I think it'll get to at least 9 grand minimum this cycle, 13 to 15 grand maximum by next year. It's gonna go somewhere in between there. Mark my words. So it's a lot of money to be made, and we're getting in these pools so we can accumulate more Ethereum, so that when it goes up, we'll have even more to sell, so that we can take some of those profits and put these back into our pools. We're just rinsing and repeating literally doing the same thing market makers have been doing. We're not reinventing the wheel at all, right? So now, just going back to volume TVO ratio, then I'm going to show you my pools and the money that I've been making. You have right here 212% APR. Why is it different than this 130 and this 128 and this? And these are all still really good, right? It's still higher than what you get in any savings account. Why is this one higher? The reason why is because it has what's called a good volume to TVO ratio. And just to explain what that is simply, TVL is total value locked, which means how much money, how much it's basically people, everyday people like you and me. This is how much money they put in this pool to be used as liquidity for people to come inside of this on this exchange and to swap their USDC for ETH or their ETH for USDC. You see that you have $2.9 million in liquidity, but the daily volume is 28.5 million. So now the volume to TVO ratio score is 9.7. That just means that this liquidity number goes inside this volume number 9.7 times. So think of it as this $2.9 million, it got used 9 times this whole day. And concentrated liquidity providers rewards smart liquidity providers. If I'm in this ETH USDC pool and my range is like, let's say my range was here all day. Hold on. Sorry about that. Get rid of my drawing tool. If my range is here, delete that. If my range is here and it's outside of the range, I don't make any money. You only make money when you're in range. And the cool thing is you can always move your ranges. So if you go out of range, we show you how to track it and all that stuff and rearrange so that you're always in range making money, because you want to be in range as often as possible. But if you're not making money. Okay. So going back to this, there were some people who weren't in range today. So it's not even that the 2.9 million got used. Only funds that are used are the funds that's in range. I don't know what percentage of that is, but you have some volume to TVO ratios that goes up to in the 50s to the hundreds, right? And that happens when you're in the market on the best days. So now let me show you one of my pools. And I've been in this pool. Charisma's been in this pool too. This is SPX, which is what I think is going to be the top meme coin this cycle, paired with Ethereum. Whenever you're looking at a chart, you're looking at the performance of these two assets together. Whichever one is the first is the one that's leading. So since this is SPX ETH, when this chart is going up, that means it's doing better than ETH. And when the chart's going down, that means it's doing worse than ETH. And the cool thing is when you're in a market like this, when everything is going green, it's good to pair two assets together versus pairing an asset with something like a dollar that stays down, because it's easier to stay in range because ETH and SPX is going to go up together. And when they go up together, like let's say ETH goes up 200% and SPX goes up 200%, they both have the same price at which they increase. So that means everything's going to stay sideways. But that doesn't mean there isn't volume. People are still buying it and selling it, both of them, but the price appreciated the same. So that means it's easy to stay in range. So I've been in this pool for a little over a year now. Charisma, can you still see my screen?
Yes.
Okay, perfect. So now this is my ETH SPX pool right here. Now, before I go into anything, you can see the position age, 29.1 days. So it hasn't even been a month since I last re-ranged. I've been in this pool for a while, but every time you re-range, all the data starts over here. I started this month at that 29 days, it was 13K. So I'm up around 8K on just principal because Ethereum, and I made a video on SPX a while ago. You see Ethereum, if I drag my measuring tool, Ethereum went up 40-50%. And if we go over to SPX, it most likely went up around that same amount. Now this hotel Wi-Fi is a little funky, so if it takes too long, I'm not going to do it. PX. I'll wait for that to load. So they both appreciate it. And like I said, I've been in this for 29.1 days. It gives you the APR. Right now it's paying 285%. And I have $1,000 in uncollected fees, but that's not for the 30 days. This is just in the last 2 days because I claimed my funds around 2 days ago. If you look right here, in 29 days, you can see the total fees that I was able to claim was $5,000. That's just fees. I'm up around 8K on my principal because ETH and SPX has appreciated in price, but just in fees, I accumulated $5,000, right? $5,000, guys. So that means if I put in 13K and I made 8 and I made another 5, that's over 100% in 1 month when you add the fees and the principal. I can sell this whenever I want and get it in cash, and boom. This is just 1 month right here. 1 month. And it's not about like when you're trading, you're like, man, I hope price does this and I hope it does that. You never know. But I know anytime people are coming on here and they're buying and selling, I know I'm going to get paid. And if I go here and I type in ETH SPX, I can look. SPX Rep ETH, this is the pool that I'm in on base. Now it says here 81% APR, but we know that's not true because I just showed you guys. But it's because my range is more narrow than the average range, right? So like I said, when you make your range narrow, it pays you a lot more. And there are tracking websites that gives you all the data. It gives you the divergent loss. So I made 19% in fees and I made whatever on my principal. So that's how our ROI. Here's another pool. This one's paying 537% APR. For everyone in this call, here's a good alpha tip. I always tell people you need 1 trade per year to really move the needle on your net worth. I sift through hundreds of thousands of white papers in my lifetime. I'm always reading white papers, and I have this whole checklist of things that I check, and whatever has the highest score gets the largest allocation in my portfolio. And I think this is a gem of a token. If you go on my YouTube, I made a video on my yield farming strategy for it, and I also did a fundamental analysis deep dive. This project will most likely 20 to 100x within the next year. So that means for every dollar you invest, you can turn it to 20 to $100 for every dollar. So I'm like, okay, I want to accumulate this token as well. So I paired it with ETH, and now I'm getting paid 537% APR. That is almost 2% per day. And you can see I've only been in this pool for 2 days and 3 hours. With 6K, I've already made $217.
Nice.
You can't show me anywhere else where you can get those types of returns. So yeah, that is the proof. My wallet address is public too, so if you know people who are good traders, you can come on this website and paste in their wallet address, and you can kind of see what they're doing. But yeah, this is it's not something where you're like hoping and like, man, I hope that people are trading in this pool. We show you how to go and find the places where the pools are. And as long as people are trading, you're literally making money and you're getting paid in the 2 assets that you provided liquidity in. You can claim those assets at any time and either turn it into cash or use them to buy other assets that you're bullish on so you can sell them when prices are higher. And that's it.
Perfect. Was trying to share my screen. I got stuck for a moment there. It's just so I can, for some reason, it's not letting me. There we go. Where did I? Guys, I just want to let you know in the chat, the QR codes are the links are there directly. I see that a couple of you have already joined the free membership, and some of you have gone ahead and purchased some memberships. But if you purchased, got the free membership and you want to upgrade, I will be sending out directly to those individuals links to your DM inside of your Mighty Networks community, which will have links to the upgrades for the membership, because those are not readily available because these are private to the individuals that we're sharing this with. Not everyone that's in our Clutch membership will be able to upgrade to this with this founder's discounts. So in addition to that, we do ask that you guys don't share these links because these links are unique. And so if you realize, for those of you that did purchase today, you haven't been approved, because we have a list of people that are being invited, and those are the people that are getting first movers advantage to this first 100 people that we're giving this to. So just don't share that link, because they will stay inside of the waiting room because they're just not on our list of individuals. We're going back to help those that have I'm going back. I've invited you guys here. I'm inviting those that have participated with me in other platforms. You've aligned with me, and we've been on this journey together, and I want to see us all win. So that's it. I'm going to come off screen. I want you guys to do me a favor, unmute your mics. Feel free to come on screen if you want to. If not, no biggie. But go ahead and get your questions answered, and that way we can help you guys along the journey.
I got a question.
Go ahead, Marco.
Floor is
What's
yours.
up, KK? Uh, Great presentation, man. My only question is, when you showed us those fees, right? That
Hmm.
when you said that 5K that you had made in fees on the pool where you had the 21K or whatever it was off of the
Hmm.
your initial investment in the pool was, you said 7K roughly.
It was around 12 at the
12K.
at the
No,
middle of
no,
the
that's
month.
right. That's right. You said 13K, and then okay. So the fees. My question is, could you, if you decided, hey, I'm gonna pull my, the fees is income too, right?
That's what the income is. When people are
Right.
going on there and
The
they're,
fees.
yeah, the fees is the income. The
Right.
decentralized
So you
exchange
could have
charge
just
the
ripped
fees.
that off of there. You could rip that off of there and still keep making the same yield.
Yeah.
Yeah.
And all you do is just go back in and just adjust the
Yeah. So basically the
the
range.
width or the breadth of your or the height of your the range you were talking about, right?
Yeah, I only move the ranges if it goes out, but it's been in range for the past 29 days. So what I do
Got it.
is I'll go claim my fees and I'll
Uh
I'll
huh.
I'll split them I'll split them in half. I'll use one half to buy more Ethereum, buy more Tibber, like the altcoin I was just telling you about. Whatever altcoins I'm bullish on, I'll buy more of
Uh huh.
those and I'll take the other half and put it back into the pool. Einstein said compound interest is the eighth wonder of the world. So now I get that
Right.
same 285% yield on not what I just had in, but on what I just put in as well. And that's how you keep growing that snowball. But also,
Gotcha.
take some of the snowball, put in ice cream and eat off of it. You know what I mean?
Yeah, yeah. It's like what's the use of making money if you never spend it? It's like,
Exactly.
but I
Your
understand. So
the funds
so
are
so
never locked. You can always pull your fees out at any time. I can go pull them out right now if I want, anytime.
beautiful.
Yep.
Yeah,
Good
for those
stuff,
of
man.
you
Thank
that
you.
got nice amounts of
Hmm.
money sitting in your bank account, just know that while it's sitting there, it's actually losing money just sitting there, when you can actually
Absolutely.
have it going to work for you inside of the liquidity pools. And if you're not compounding all of it, you can have a strategy where you take out 25% and then you spend it where the other 75% is compounding, or you can do 50-50. But you can discuss those strategies inside of the challenge, or if you decide to do parliament, you can actually discuss those on your one-on-one call. Yeah.
Okay, and to win the contest is the quickest person to 100K. Is that how it works?
No, so everyone's running their own race in that challenge. So we're not competing against one another, but the person that you're challenging is you, because you're going to be setting some goals in the very beginning of your 49 weeks. You're going to set where you want to start, and then from there we're going to be able to reverse engineer where you would be within those 49 weeks if you hit those targeted goals. And then our coaches are going to just
Uh,
make sure that you're staying on target along that journey, and if you're not, you're falling below what your target is, they're going to help you get back on target so that you can reach those goals within the 49 weeks.
So by on target, you mean like if you keep setting up ranges and and your stuff keeps dropping above or outside of the ranges, they help you figure out what you're doing wrong with your range projections, and then they help you get your ranges right. Is that what
Yes, I'll
that
tell you
is?
my own personal experience. When I first got started, all I wanted to do was make money and make money quickly. So Vince knows this and I share this. He is a little bit more conservative than one of our other coaches, Coach Chris, when it comes to, but I love his strategies, because when I listen to what Vince is doing, I'm thinking more a little bit long term in some of these things, but then he'll flip the script and do something that is not so conservative. But I was a little impatient in the beginning, so I didn't want to follow some of his strategies. So I kept making my ranges really tight. And I was like, oh, yeah, I'm in there hitting my goals. But I go to sleep and I wake up in the next morning, I was out of range and I lost. And then so when I started realizing I was doing that, I was actually losing, because during that sleep time, I started seeing Coach Chris earning so much, and I was like, oh gosh, I really got to go back and pay attention. And then Vince shared some strategies where I can be in one pool multiple times, and he teaches us inside of once you get inside, but it's to be able to set multiple ranges, and then he goes over what that strategy is, and then that was a lifesaver. So you get to learn how to overcome. So that's when I finally mastered that. I went from, averaging a little bit less than 0.5% a day, and then that's when I started hitting my about 1.8% to a 1% per day.
Got it.
All right. You're welcome to ask more questions, but I'm going to be calling names just because you guys are on here. Guys, don't be shy. Andre, Aurora, I know you got questions, girl. Caleb, Cicely, I know you got questions too, because I know how that brain of yours works. Corliss, hey sis, my sis Deanna is on here. I'm sure she got some questions if she wants to drop those in. Lou, Ronald, anyone that has questions, feel free to turn your mic off and get them answered. Or if you want to drop them in the chat, I can also read them out loud. Hey, Queen.
Hello. I do have a question, and thanks for the presentation. It's very good. A little bit, I do need to take the training, that's for sure, because it's a little bit over my head, but it's very good and interesting. And one thing that I wanted to get clear, Vince, it sounded like you said volume. See, I'm so confused. I don't know if my question is going to come out right. It doesn't matter whether there's more there's more being sold or bought or whatever. Volume is volume or something like that. You said something along those lines.
The volume to TVL ratio?
I think so. Yeah.
Mm-hmm.
Total value. Yeah. Total value locked, I guess.
Yeah. So basically, I should have explained volume. I forgot to explain volume, so my apologies. So volume is just the rate at which things are being bought and sold in terms of dollar amount. So if I have $100,000 in daily volume, that means it was 100 in Ethereum and USDC. That means it was $100,000 worth of Ethereum and USDC sold back and forth. Doesn't matter how much was bought, how much was sold, because the fee is the same. Because for every buyer, there's a seller, so it's technically the same thing, right?
Mm-hmm.
It's trading volume. So we show you how to find pools where the volume is higher than what's in the actual pool, right? So because what happens is, like, let's say you have a pool, Aurora, of, let's call it $100 million in the pool, and now that day you had $100 million in trading volume. Each trade isn't going to be 100 million, so you're not going to use it the whole in all one fell swoop. You got trades of $10, $1,000, 100,000, 10,000, 500, and the same capital is being used all over again. So you want to find pools. We help you find pools where the volume is higher than the liquidity that's locked in there. And I call this, it's just like, you think of like the Pac-Man mouth. Pac-Man is the liquidity, and the volume is what he's eating, right? That's how we get paid. The volume is what pays us our fees. So we help you find pools where you have less Pac-Man and more food, right? If you have a pool where the TVL is much higher than the volume, that means you have a lot of Pac-Man, but just a little bit of food. Everyone's just competing for the scraps. So finding pools with good volume to TVL ratios is where you have a few people and they got too much to eat. And that's a good problem, or a good thing, not even a problem at all. It's good.
Okay. And right now,
does that make sense?
It's the picture is coming together. Right now, it seems like the market is really busy or bullish, as they say. This program, does it continue whether we're in a bull market or a bear market?
Oh yeah. You know what? If market makers only provided liquidity when things were sideways, we wouldn't be able to sell when markets are high, and we wouldn't be able to buy when they're cheap, because we still need those market makers to provide that liquidity so we can buy and sell when things are high. So there are strategies that you can deploy to provide liquidity in bull markets, bear markets, and sideways markets. It's times you want to be buying, it's times you only want to be selling, but you always want to have a portion of your portfolio being used for market making, because you are always generating those fees. Whether if it's buying and selling, it's always fees. And through generating those fees, that's generating cash flow. And this is actually a biblical way to run a portfolio. And I made a whole video on that I'm happy to send if
I'll be
anyone's
watching it
interested.
tonight.
Yeah. So now you're
Okay.
always just getting cash flow. Cash flow is king. Cash is king.
And the most
Okay.
important thing for people that are saying, yeah, I'm putting money aside from every paycheck to buy Bitcoin. How about you put money aside from every paycheck to put that money into a liquidity pool that is generating profits for every week for you? And what that baby spits out, you take a percentage of that, go buy your Bitcoin, and a percentage of that go and compound it. So every week you're generating more, you're getting your Bitcoin, and you're making your money grow along that journey, and it's just working a couple different times for you and multiplying.
Okay. Very good. Well, thank you. That's all my questions.
No problem. Thanks for asking. Thanks for hopping on.
All right.
I have a
Clinton, I
question.
see. Oh, go ahead.
This is Corliss. Let's see, how should I put this? When I was doing trading with Forex some years ago, we were able to get a profit whether the market was bullish or whether it was going down. We still were able to
Bearish.
Yes, bearish. And I'm not connecting the dots with how that is going to work with what you're offering. So I'm missing something, but I'm just, because we have to sleep sometime. And so we're not always watching the market 24 hours a day. And we have to rely on some type of projection or some type of pattern. So I'm just wondering how that works.
No, great question. It's a fair question. So Forex was my on-ramp into investing as well. So I know exactly what you mean as a former Forex trader. So as a Forex trader, I used to wake up and I used to trade the New York session. You know, I'm waking up, I got my trap set. I used to use a pitchfork strategy where I'm trying to get my 3% a day. If I'm lose 2%, I'm done trading for the day. I have my rules, all that stuff. The one thing I didn't like about Forex trading, and I'm glad I did it because it showed me the art of reading charts, is that you have to be, unless you have an algo, and you have your limit orders and all that set too, but sometimes they don't hit. You have to be by your computer for hours a day. But like you just said, you have to sleep sometimes. With this, you're not worried about a limit order getting hit. That's another side of your portfolio. This, you can set your, like Charisma was saying, when she hopped in, she was making these super, super tight ranges, right? Also, this market never sleeps, just like the stock market too. So it's just like if the market hits your limit order at night and the market comes back on, sometimes it doesn't hit. Crypto never turns off. So while you're asleep, you can have a range that's wide enough. Like you saw the pool that I just showed you. I haven't touched that thing in 29 days and it made me 5K in fees. And I haven't had to do anything. I could have been in a coma for 30 days and woke up and that 5K is still sitting there. I didn't have to log into my computer. I don't have to do anything. And if it goes out of range, you still have your fees. You don't lose everything you accumulated, right? So now answering your question, how do you make money when things are going down? If I thought Ethereum was going to drop, I can make my range for, and let's say Ethereum's at 37K. I can put my range from 38K down to 21K. And the whole time it's going down, I'm making those fees. Now, compare this to another scenario. We know Ethereum, at least I do, but you should know that Ethereum is going to at least hit 9K within the next year. You have an Ethereum ETF, this regulation just passed. Companies are adding Ethereum to their treasury versus holding your Ethereum at $37,000. And let's say it goes down and you're just holding it and it goes back up to 37,000 or 3,700, you're going to be at break even, right? Versus if you have your Ethereum in a liquidity pool and you make your range from 38K down to 21, it's going to go down. It's going to come back up. And versus you just being at break even, you made fees when it was going down. You made fees when it was going up. You're going to be back at break even plus your fees.
That's the connection. Okay, great.
Yep.
Thank you.
Yep.
Thank you.
No problem.
Got it.
No problem.
All right, so who's up next?
My main man, Clinton.
Hi, Vincent. No, thank you for
I'm glad you jumped on.
this.
I'm glad you jumped on, man. I'm glad you jumped on.
Yeah, no, thanks for this. I had a question, I guess, from and this is just a very mundane thing, just kind of on the back end, right? As you're amassing fees, as you're kind of also growing your position, like how is all that kind of managed from a tax perspective with what you're, reporting to the IRS? Because I know the rules around kind of crypto and how it's treated, and at least until recently, a lot of these things were unclear. I guess the fees are maybe a bit more straightforward and kind of treated as income, but how is how does what does that look like?
So I'm gonna get this is a two-part question. Me personally, I did my DeFi taxes during DeFi summer. Never want to do that again. It was terrible. I'm surprised I still have hair. Um, every year the tax thing gets easier. They have these softwares where you can plug in your wallet and it'll give you everything to give to your accountant. And every year it gets easier. Um, it is treated as income tax, right? I do all my crypto and all my stuff is working inside of my hedge fund, so they do all that stuff for me, so I never have to do that. But for everyday folks, Coach Chris, he doesn't file taxes, but he does prepare taxes for people, and he will be able to better answer tax related questions. I'm not an accountant at all, but we do have people we can connect you with. But just to give you like the bare bones, it's 4 taxable events in crypto: when you buy and sell crypto for capital gains, when you exchange crypto for goods and services, and when you accept crypto as payment for merchandise. When you do mining or any kind of liquidity providing, it is considered income tax. So you use a software like TaxBit or something like that, where you plug in your wallet address, they give you all the tokens you provided liquidity in, all the fees that you made. You give that to your accountant. And the cool thing about crypto is that since it's not like since these first off, the IRS is understaffed. Two, crypto is still a wild west. We just got clear regulation on this stuff, so they really just want you to do the best you can, and you're fine. But that's the best answer I can give you right now. Hopefully that helps.
Okay.
Yeah, and in
Oh,
addition
that's
to
good.
that, when you have the fundamentals course, there is a brief section that goes over the basics of the taxes for doing your crypto. And when you jump it over into the mastery course, there is more of a deep dive that Coach Chris is actually working with us. Right now, you can't, it's not unlocked, but it's going to be unlocked because we're doing more of a deeper dive to be able to help everyone out with that. Everyone here in the US, because there are people from around the world. So yeah.
Clinton is in Portugal, right? You spend half your time in Portugal and Texas?
Yeah, no, it's so I'm full time in Portugal, and so that is another wrinkle kind of with the tax thing, kind of where am I, and kind of who gets to tax me on that front. So
There's
Got
a
you.
really great website that you might want to plug into. It's called Nomad Capitalist.
Oh, I love that guy.
And through there, they have a lot of conversations in regards to people that are in situations like you that live abroad. And they have the tax conversations and what countries and what kind of things that you need to pay attention to.
Yeah, he has a YouTube channel too. Lots of videos, lots of good stuff. Been watching him for years.
thanks.
Great. Who's
Yeah.
up next?
Let's see
Lou,
who else.
we got Hassani, Cicely, Caleb, Sinqua, if you want. I know you are our new community manager, guys, but he is learning along the way. Sinqua is my son, but he is 19 years old in college and learning this. I can't wait to see where he's at in a year going through the challenge as well.
Yes, I
Guys,
have a question.
yeah.
All right, can anybody see me?
Yep, we can see you.
Okay. My question is, of course, the goal of this is always to like make your money. So how do you know like when you want to take profits out or to keep them holding? Because obviously, the more you put in, the more you're gonna get out. How do you know like to take profits out, or what's the balance you take from it?
So you want to have a plan to get out before you get in. So that's That's the right question to ask. And you want to ask that before you get in. Your mom was telling me how good you're doing on Ethereum. So just to tell you, my sell targets, I'm not selling any Ethereum until it goes past all-time highs. Well, again, I took a little bit of profits, but that's just because I want to put some in my liquidity pools. But before you get into it, before you get into an asset, you come up with an aggressive and a conservative target to where you think it can hit, and set up your take profit strategy in a way to where even if it doesn't hit your conservative or if it exceeds your aggressive, you can still take a good amount of profits off the top. So I know y'all watched my Tibber video. I'm releasing my take profit strategy for Tibber tomorrow that I came up with before I ever bought into the coin. So you'll see that video tomorrow. But basically, you the first thing to note, and I have another part of this I'm gonna answer as well. The first thing to note is that you want to be aware of levels that traders are most likely going to come in. So 7,000, 8,000, 9,000, 10,000 dollars, I guarantee you, ETH probably is not just going to blow past it because it's a big psychological level. So I like to take profits a little bit below where I know all of the traders are going to take profits. It's kind of like when you're getting in an Uber and you are being dropped off at a concert. You don't want to have it drive into the big crowd of people because it's harder to get out. You have them drop you off a few blocks ahead so you can just walk right on up, right? So you don't have to be dealing with the cluster and even risk paying more because it's a lot of people there. The second part is, like I was explaining earlier, you want to have a percentage of your portfolio in cash, a percentage in assets, and a percentage in used for yield farming or market making. And then you want to go and revisit that on a monthly basis and do something called rebalancing. And we have a whole video in the course on rebalancing. And when you do that, it forces you to buy low and sell high. For example, let's say you want 50% of your portfolio in Ethereum. And now Ethereum just went up 40%. Let's say you want it 50% Ethereum, 70 or 20% altcoins, so that's 70%, 20% in yield farming, and the other 10% in cash. And now at the end of the month, now instead of being 50% Ethereum, your portfolio is 60% Ethereum. So when you go to rebalance and you have to return your portfolio to the ratios that you set, since your Ethereum's at 60%, you have to sell off 10% of your portfolio. And ETH, it forced you to sell it at a profit. Now you have to put that 10% where it's lagging. So if your cash portion now represents 5%, now you have to get that cash portion back to 10. So now it just forced you to take profits. And now, for example, let's say you want to be at 50 and Ethereum goes down 20%. And now instead of being at 50%, your Ethereum position represents, I don't know, 42%. Well, now it just forced you to allocate 8% of your capital into Ethereum while it was cheap. And when it goes up, you just keep doing that. You keep doing that long term. This is literally how institutions manage their portfolios. You keep a certain portfolio. I have the spreadsheet that I use. And then every month you just keep doing that. And as you get, there's something called the fear and greed index in crypto. You want to be greedy when people are fearful and fearful when people are greedy. Be blind when there's blood in the streets, never let a good crisis go to waste. All the quotes you hear about buying low and selling high. So it's just like as the fear and greed index is going up and people are getting more greedy, you want to be getting more fearful and selling. So as we get deeper into the market, like right now, my portfolio is around 45% in Ethereum. But as Ethereum starts to get towards, and my cash position is like 15, 10, as Ethereum starts to get towards this 8, 9, 10K level, I'm going to be like, okay, I want to be 50, 60% cash. I want to be 20% Ethereum. So if there's a major drop, it isn't a major hit on your portfolio and you're still able to win long term. So you want to just basically, to answer the question, set up how you want your portfolio structured, how much of your capital you want to allocate towards Ethereum, how much you want to allocate towards yield farming, how much you want to allocate towards cash, and then you just keep that balanced. And then the cool thing about your yield farming rewards, when you get your rewards, you're like, okay, I'm gonna put some here, bulk up my cash position, bulk up my altcoin position. That's kind of how you work it. It's like you're a puppet master.
Sorry, I was on mute. Gotcha. Thank you.
Yeah, no problem, man.
All
Man, your
right.
hair got long, man. Jesus.
Yeah, real long.
Jeez. Thought my hair got long on this trip.
All right, guys. Anyone else has any more questions? All
Going
right.
once, going twice.
I do want to say the
So,
YouTube videos have been very helpful, and I've been watching. I was up to about 2 a.m. yesterday watching them, so I appreciate it.
no, no problem, man. I'm glad you get value from them. Wait till you see the one tomorrow.
For
It'd
sure.
be good. And then after you watch it, I'm not sure what your portfolio is looking like. We should go over that, but you should just make a mock take profit strategy and show me, and I'll give you feedback on it.
Okay.
All right, guys, going once, going twice, because we are going to head out of here. Mr. Halliburton has blessed us with almost 2 hours of his time today. I thought we'd be here for an hour. I was wrong, and but it was very well worth it. And hopefully, you got from the way that the things that he shared with you, the way that you're going to be getting information delivered to you within the community. And I know Aurora, you was like, oh, this is kind of like a little bit too much for me. Girlfriend, guys, everyone in here, I understand exactly how you feel because when I first jumped in and started learning, it was like, I was like a deer in headlights. I was literally feeling how you are here today. And once I plugged in to Vince, because I got access to the community after we met that very first time, got plugged in, and I just started learning. And which each day that you come to the classes and participate, and just get into that pool. And I tell people when you get to the course, just get through the course. Do not try to master or understand everything on the first go around. Get through the course. Once you're done through the course, get into your first pools, get into that challenge, and then start watching the course again. Or if you have a question, you realize that it's coming up more than once, like you're having problem getting into a pool, just go back and watch the video again, because at this point, the information will begin to retain just a little bit more because you've not just read the theory, but you actually went into the lab, you actually showed up, and you're actually applying what it is that you learned. And then you just need to go back and review it again. And I promise you, with each passing day, it gets easier. It gets easier every single day. And then you'll start watching the profits that you're doing. And then you're going to begin to be up here and start regurgitating all the information that you shared. None of us may never be a know-it owl like Mr. Knowit Owl himself, Vince. I mean, that's because, this guy has read hundreds of books. And when I say, I don't think I've ever met someone that reads as much as he does. When I realized that in addition to doing all these videos, when he's like, yeah, I just finished reading this 50-page white papers. And I'm like, you did that today, 50 pages? So he's not just one of those people that just goes reads one time, but it's constantly reading. But the beautiful part is that he has his heart to go and pour everything that he's learning. He has a gift. God blessed him with a gift, and he's passing that gift on to those that are inside of the community. And he's agreed with me to do it at a fraction of the cost because they're gatekeeping this information. Other communities, you can go and look up the competitors that we have, and I will tell you, 20 grand is the minimum. I know because when I first got started, I wanted to go to do some comparisons. And when Vince and I transitioned the conversation to me really participating in the company on a more deeper level, because he realized that I had my community and what I was doing for, everyone within that community. I realized that the only way I was really going to learn is by trying to go and have these conversations with these other communities. And I signed up and I listened to their pitches, and I was like, there was no way that I was going to be able to put aside in my budget 20 grand to just learn. And that's trusting these communities with $20,000 in addition to whatever you want to put into your liquidity pools. So that meant that even for me to turn a profit, I had to at least minimum make 20 grand. Here, you're getting it basically for free. the costs that you guys are taking on when it comes to joining at this founder price. This is the basic overhead to cover our coaches to make sure that we can afford their time, because they have other things that they do for their other businesses. So we wanted to make sure that we can be able to allocate just a little bit to be able to make sure that we're covering their overhead. So again, I hope to see you all in the community, no matter if it's a free Clutch membership or if it's one of our paid memberships. I'll be reaching out to every one of you. And if you have any questions and I don't reach out to you right away, just feel free to shoot me a text message, because you guys all have my phone number. For any of you that missed this and you're watching the recording, again, you're going to be able to reach out to me as well. I don't believe the recording will drop any links inside of the chat, but you'll be able to reach out to me directly. I've either emailed and or text everyone that was invited and RSVP for today, minus I think, Vince, you had a couple extra VIP guests that actually came on. So I want to thank everyone for taking your time out and trusting me with sharing some new information with you. And I look forward to continuing our crypto/DeFi journey to infinity and beyond.
Thanks, everybody.
Thanks.
Bye, guys.
Y'all are amazing. Absolutely phenomenal. Thank you so very much for everything.
Thank you for coming on.
All right, darling. God bless y'all.
God bless you
Give me
too.
about 10 o'clock my time, KK. I'll be off work.
Okay. Bye. We still got some people that are on here. I don't know.
Yeah, I don't know. I think they got some. I think they got some questions.
I think they got some questions. They hanging out for the after party. I can't wait to get everyone. I love these Knowit Owlz shirts.
I know.
Yeah. All right, so Vince, thanks a lot. It's just the three of us on here. I'm going to go ahead and stop the recording.